Good afternoon, everyone. This is your girl Lynette from DALS Credit Solutions. Today is Tuesday, September the 6th, 2022. We are using the platform Zoom to bring you Credit Tip Tuesday, and we will be speaking about student loan forgiveness. If this is your first time tuning in, please click like and share. Put in the comments where you are tuning in from. If you are watching a replay, put in the comments hashtag Credit Tip Tuesday replay. If you would desire to have a copy of the slides, please put your email in the comments and I will send this to you directly after the live. And we want to get started as people are coming in. Again, we are using the platform Zoom. So put in the comments where you are tuning in from. There are many misconceptions about this student loan forgiveness. I was not going to mention it, but I felt the need that I should for the simple fact of what I have been hearing from other financial literacy companies. And the reason I'm doing this because one, we're about awareness. Two, we don't judge on the why, we improve the how. And three, we want to ensure that you understand, yes, everyone should qualify for the student loan forgiveness if you are within that category. However, many people are saying if you get this forgiveness, your credit score will jump from the current to 800. And the Credit Tip Tuesday will allow you to allow myself to demonstrate numerically why you will see only certain criteria will see a growth in credit worthiness, as far as a score, resilient score, along with the overall credit profile. And again, I know a lot of times we use marketing. I say we because I'm within the industry. When the government sends out notifications on what they're doing, a lot of times organizations are using this as a marketing tool to grab clients. And the goal is for, my glasses are very crooked. All right. The goal is for you guys to understand. So one, know your numbers. Two, identify where your pain points are. Three, will this honestly help you or hurt you? Again, if this is your first time tuning in, please put in the comments where you are tuning in from. If you are watching a replay, put in the comments Credit Tip Tuesday, hashtag Credit Tip Tuesday replay. And also, I would like for you to like, click, and share the live, as I will be replaying this repeatedly throughout the week so we can reach all audiences. This is, again, not to put anything against, say anything negative against other individuals in the financial arena. However, we have to understand the numbers and the dynamics, and we have to stop saying what something can be done and it really can't. So again, make sure you like, click, and share, and we will get started. So I'm going to share my screen. Again, I am using Zoom, and we're going to have a discussion. So I'm going to put this in PowerPoint mode. So again, I'm talking to you about student loan forgiveness. The topic today is, will it hurt the score or will it help it? We're going to go over 5 topics in total, and it's going to give you a synopsis on what you need to understand. 1, how will student loan forgiveness affect the current credit score? Topic 2, how to calculate, once forgiven, the outcome of the credit score. Topic 3, what is the criteria? Topic 4, how do I qualify? And topic 5, the summary. Before we begin, I will let you know that DALS Credit Solutions, this information is for sole purposes of awareness and credit education. DALS Credit Solutions Company will not support anyone who removes items on the credit profile legally owned by the consumer. DALS Credit Solutions Company will not participate with credit profile numbers, fake social security numbers, nor authorized users of the unknown source. And DALS Credit Solutions Company is not responsible for any illegal attempts regarding Federal Credit Reporting Act, credit and consumers laws for reporting. Let's get started. So again, we often hear about student loan forgiveness, and it's the moment of triumph within many individuals who have student loan debt. However, one, do I qualify? Two, will it create a growth in a credit score or decrease the individual's credit worthiness? With student loan forgiveness, how will it affect my overall credit profile? Who would benefit more regarding forgiveness? Credit restoration companies, what are we doing to ensure the client or potential client will improve credit worthiness regarding student loan forgiveness? Let me start my shit and let's go, because I'm going to make some statements here. Topic 1 and topic 2, how will student loan forgiveness affect the current credit score and how to calculate once forgiven, the outcome of the credit score. Should be a question mark there, but if we put it, please forgive me. Again, if you're tuning in, my name is Lynette Stevens, and I am the founder of DALS Credit Solutions. We are speaking about student loan forgiveness. If this is the first time you are tuning in, please put in the comments Credit Tip Tuesday and where you are tuning in from. If you're watching a replay, put in the comments hashtag Credit Tip Tuesday replay. The goal is for one to understand, yes, we are getting student loan forgiveness. 2, certain categories will benefit and certain categories it will do harm. However, I'm not advising anyone not to get the forgiveness because regardless, overall, it is decreasing the amount that's owed on the overall credit profile. The way I categorize this is, 1, we looked at the credit, adverse marks, meaning negative reporting, FICO resilience score, the Pell Grant, and the student loan forgiveness amount. I started at the ranges of 450 to 800. And I did this so you guys can get an understanding of the concepts of how this was calculated for the individuals in each of these ranges. The first set of remarks are ranging from the 450 to the 566 credit score. This normally is viewed as 13 to 15 negative reportings, not enough credit collections. Student loan payments are the only positive item on the credit report. FICO resilience score is between 75 and 100. Now, those that don't know what the FICO resilience score, this is the score that determines, are you credit worthy for that loan, that credit card, or any line of credit that will allow you to grow in your personal or business. FICO score, resilience score also goes by the lower the number, the stronger the score normally. If your numbers are high, you normally have a poor to fair credit score. Now, I have seen it opposite. So this is, again, just documentation on what I seen within the analysis of individuals that I have as clients. The Pell Grant was granted and the student loan forgiveness amount was 20 grand. Now, without jumping to the qualification parts, you have to have certain criteria to get the $20,000 forgiveness. And if you made over a certain amount, you will only get $10,000 in forgiveness. So we will again begin between the credit scores of 450 to 566. All those that wish to follow in these numerical concepts, I believe you should, for the simple fact, when you hear a company saying, if you come with me and I will give you a credit loan forgiveness for free, I will also include, this will also be included in your credit restoration package. I advise you to ask, if my scores range between 450 and 566, how would this $20,000 forgiveness benefit me? Would it hurt the score or will it help the score? Very important. As individuals is tuning in, my name is Lynette. I am the founder of DALS Credit Solutions. Today's topic is student loan forgiveness. Will it hurt the credit or will it help the credit profile, excuse me. We are tuning in using the platform Zoom, and we will also, if I will also appreciate if you will like, click, and share. If you desire to want the slides after the live, put your email in the comments and I will send the slides directly to you. I can't heal the world or save the world by myself. I respect everyone within the field. The goal is to educate correctly, effective, and make sure the outcome is satisfactory to the person that's rendering the services. The calculations, if the only positive item on the credit report is the student loans and decreasing the amount on the student loans, will this hurt or help the score? Now, I want you to look at the profile as I speak to you regarding the credit scores ranging from 450 to 566. So they normally have 13 to 15 collections. However, this is not everybody. This is just more so of a synopsis of what I see with my clients. Normally $39,000 in debt, give or take, credit cards, repo, evictions, medical bills, etc. Student loan debt is $61,000. If 20K, which would grant them the Pell, that they receive the Pell grant, if 20,000 is removed for student loan forgiveness, we now have 39,000 in collections. 41,000 in student loan debt, which is positive reporting. The income range that I utilize for this group is between 36 and 48,000. The income I use for the calculations is $48,000. When you evaluate your debt to income ratio, you cannot include living expenses such as utility bills, food, or entertainment for more accurate results. Many people would try to incorporate this and they would literally throw off the whole ratio. The goal is for you to understand, will this help you? Again, I'm not telling you to not get the student loan forgiveness. Any debt decretion, please get it. However, I'm trying to ensure you guys that if you have companies coming to you saying, we would get your student loans removed, which is what the Department of Education is doing. However, we will throw in our credit repair services for X amount of dollars. And we will guarantee you an 800 or 700 credit score once this is done. Within these categories, I want you to see numerically how this is either factual or not. So again, as we continue, you have between 13 and 15 collections. The score ranges from 450 to 566. Remember, everyone, the 5 pillars on the credit report, and that's payment history, credit utilization, credit age, overall credit, and mixed credit. Again, collections is $39,000. Total student loan debt prior is $61,000. The way I measure debt to income ratio, according to FICO and other financial institutions like, say, Bank of America, Green Banks, and Wells Fargo, it calculates as follows. Excuse me. We use the income of $48,000. The total debt with the collections and the student loan alone equates to $100,000. So the way you get your debt to income ratio is you have to take the total debt on the credit report minus home bills or any bills outside of the credit report, and you divide that by 12. When you divide 100,000 divided by 12 months, you will get a monthly payment of $8,333.33. Now, we all know that $8,333.33 is way past the 48,000. So this person's debt to income ratio, according to this credit range, is 100%. But to get the honest answer, you would take the 48,000, which is the yearly income, and divide it by the debt on the credit report, and you will see that the debt to income ratio is a 48%. Now, if you remove 20K for the student loan forgiveness, right? We would now take the same collections that's equaling $39,000, and we decrease the debt to 41,000 because you had 20,000 removed for the student loan debt, which is the only positive reporting on the credit profile. You have a total now of $80,000. Everybody's like, yes, I got $20,000 off. However, let's continue. If you divide the $80,000 divide by 12 months, according to the debt on that report, you will have monthly payments of $6,333.33. Mind you, your income for the year is only $48,000. We all agree that the debt to income ratio is 100%. But to show you where the debt to income ratio increases for this category of credit scores from 450 to 566, you take now the 48,000, which is the yearly income, divided by the new debt on the credit report is 60%. You will see that the debt to income ratio increase and the credit score will drop. You have to look at the category. One, individuals with this credit score range, and again, this is what I've seen with my clients, this is not everyone, ranges from 450 to 566. The reason the score is holding at those in those areas because the oldest account is the student loans, and 9 times out of 10, allegedly, that is the only positive reporting on the account. The algorithm understands that if you took $20,000 and put it on a positive payment history of your student loan debt, yes, it decreased the amount, but did you improve your payment history? The answer is no. Your credit utilization, did you improve it? The answer is no. The credit age, the answer is no. Overall credit and mixed credit, the answer is no. Because in order to see growth in a credit score and its profile, we have to improve the 5 pillars that's keeping you away, keeping you from that exceptional score. So it's very important to understand this. If you are tuning in for the first time, please put in the comments where you are tuning in from. My name is Lynette. I am the founder of DALS Credit Solutions. We are speaking on student loan forgiveness. I am using the platform Zoom, and we are discussing, I never say that word. We are talking about, will the student loan forgiveness help or hurt the credit score? Again, I'm not telling no one not to get this. However, any debt that's decreasing by any amount is a good thing. However, I don't want consumers, clients, and potential clients to think if you're seeking other financial literacy companies and they tell you, you know, the Biden administration is decreasing your debt by $20,000. We would throw in a credit repair package for you, and we will ensure that you will get an 800 credit score. I can promise you, as long as I've been doing credit, and I am still a rookie, and I learn every day by reading and knowledge of the laws and understanding the algorithms. I don't care if you had $50,000 worth of debt that you put on a positive account. Yes, it will help you because you're decreasing the debt. However, if you're not improving the 5 pillars, and that's your payment history, credit utilization, credit age, overall credit, and mixed credit, you're not doing nothing to your credit but decreasing an amount owed. So if you think you're going to go between a 450 and a 566, once the $20,000 is forgiven off your credit, you're not. This is what I'm telling you. Please be mindful of the numbers. It will benefit you in the end when you understand the literacy overall. It's not the removal of the debt, it's for you to understand the dynamics and how the algorithms move on how you're going to, one, pay your bills, build a utilization, understand the age, your overall credit, and mixed credit. So we did this section, we talked about credit scores from 450 to 566. Again, please like, share to other individuals. I cannot reach the world. However, I am here to help as much as I can. If you have any questions, I am using the platform Zoom. Please put your questions in the comments. Once we are done with all the information, I will answer as many questions as I can. And if I'm unable to answer, I would then ask you to send me your email and we could discuss offline for free. If you fail to ask the questions during the platform and you come in my inbox, I will send you my consultation link and you will probably be referred to come back here to ask the questions. The next section we will look at is calculations for credit scores 567 to 653. Again, if you want to follow, please print, pull out a pencil and piece of paper and look at the numbers. Once you understand the knowledge, look at your own numbers and see how this will work for you. My Credit Tip Tuesdays are always on my platform of my business page. We're uploading them now to my website, along with LinkedIn, Instagram, Twitter, and other platforms. If you come on my email list, if you subscribe, to my email list, you will also get this information on a monthly basis. This is something you cannot watch one time and feel like you can do it. You have to stay consistent and determined to ensure you understand the knowledge. Financial literacy is something that you cannot do overnight. It takes time and repetition. Again, the consistency and determination to move forward. Again, the next range we would do is 567 to 653. We looked at if the only positive items on the credit report is student loans and the decreasing amount of the student loans will this hurt the score. This section I normally see 8 to 12 collection rates from $31,000. Student loan debt is $54,000. If 20K is removed, now we will have 31,000 still in the collection category, and now we will have 34,000 in the collection in the student loan category. So let's look at this. Again, we cannot include any living expenses. With the range of collections in the score of 567 and 652, we have to look at did any of the 5 pillars improve. So as I stated early, collections total 31,000. Again, you still see the credit cards, repos, evictions, medical bills. The starting student loan debt is 54,000. I used the income of 57,000 because I ranged this between, I think, 45 and 57,000. I used a higher amount in all fairness because everybody within this range, they normally make this much. Doesn't matter what category you're doing, people are working very hard because of inflation. So if the income, okay, is 57,000, we have 31,000 in regular collections, and we have 54,000 in student loan debt. If you total both, you would get exactly, $85,000. Again, we would take the 31,000 and add it to the 54,000 that is the student loan debt. When we total this, the current debt on the credit profile is $85,000. If you divide this by 12 months, you would now get $7,083.33. The total income for this person is $57,000, which we know $7,083.33 has is way more than the 57,000 a person will earn. Your debt to income ratio is 100% because anytime you exceed the amount on your debt by the amount that you earn, regardless of what you do, if it doesn't suffice, your debt to income ratio will push the peak over 100%. In order to get the true value of the debt to income ratio, you would get the total amount of income, use the total amount of income divided by the current debt on the credit report, and you would get 67%. Now, if the collections are still at 31%, the student loan that decreased from 54,000 to 34,000 because 20,000 was removed. We now have a total of debt on the credit report of 65,000. We want to divide this by 12 months, and you will get a monthly amount of $5,416.67. Again, we know anytime the total debt is over the amount that you make in a year, it's going to always be at 100%. But get the true debt to income ratio, you would take now the total amount that you make over the total amount that's owed. If you divide 57 over 65, you would get a debt to income ratio of 88%. Now, many of you are probably saying, oh my God, like, why is my debt to income ratio increasing? You have to remember, when you are not restoring the collections and taking care of that debt, but you're taking care of positive debt, remember the items that are negatively reporting is the ones that's populating your score. The good student loan debt is holding your scores between the 567s and the 652s. So if you had $20,000, if it was given to you to do whatever, and it had to be on your credit, I will recommend you to pay the negative reporting items because the student loan is already positive and it's holding your score. In order for you to understand how FICO and its regulations work, the algorithm is saying, why did $20,000 go on student loan debt, but the person kept all their negative reporting with a balance? This is what keeps the credit score at a stagnant state, and it won't grow. Again, I'm not telling you to not take the student loan forgiveness. You will be foolish not to. The goal is for you to understand that if you're going to seek services that's offering packages to say, hey, I will do your credit restoration and get your student loan forgiven, and we can guarantee your scores will shoot up to 800, you have to understand it's not factual in these methods numerically. If this is the first time you are tuning in, my name is Lynette. I am the founder of DALS Credit Solutions. We are speaking about student loan forgiveness. Will it help the score or will it hurt the score? We're also asking if you want a copy of the slides, please put your email in the comments. We are using a platform, Zoom. If you would like to click and share with everyone, I greatly appreciate it. If this is your first time tuning in, put in the comments where you are tuning in from. If you are watching a replay, put in the comments, hashtag Credit Tip Tuesdays replay. This information is for information purposes. This data is for information purposes only. This is only for you to have the knowledge that you must understand the numerical factors of your overall credit report. As we continue, yes, I did all 4 categories because I am who I am. We are now hitting the 653s, the 743s credit profiles. Now, many people will say, oh, she's only going to do a straightforward, but I'm going to tell you how thorough my mathematics is. I even added a utilization percent along with the credit age to let you know that the numbers don't lie. It's the people behind the methods that do. We're looking at now calculations for 653 to 743, 3 to 7 negative remarks, 3 to 7 items in collections, credit cards, repos, medical bills, student loan debts, 41,000. Late payments on a student loan debt, your credit utilization is 8%, average credit years is 10%. If 20,000 is forgiven on a student loan debt, the student loan debt is 41,000. The collections is 26,000. Utilization is 8%. The income ratios is 69,000 between 88,000. I use the 88,000 to show you stronger remarks so you will not get lost. And that really ranges for people with those scores, that's what they're making. So again, we are not going to calculate any everyday expenses. So before we answer the pillars, if there are any improvements, let's look at the math. We have $26,000 in collections. Credit utilization is 8%. 2 missed payments on the student loans. Student loan debt is 41,000. Credit utilization is 8%. Credit lines total 7,500. This is again based off of what I've seen. If the person is only using 8% of the utilization, the amount that's being used is 600. The way I found this, you take 7,500 and you multiply this by 0.08 to find how much debt they have used. The income that we use is 88,000. The amount of debt total on the credit report is 67,600. Now, I added 26,000 for collections, 41,000 for student loan debt, and the 600 that's added for the amount that's used. Remember, the income is 88,000, okay? We take the amount of debt, which is 67,600 divided by 12. You will get a monthly amount of $5,583.83. Now, if you look at this, the way you find this, the debt to income ratio was only 76% because the amount of debt is lower than the income that is being provided. If you now remove $20,000, worth of debt off of the student loan payment, student loan amount, and they are still at an 8% credit utilization. The student loan debt with the late payments, because there are 2 missed payments, now decreases from 41,000 to 21,000. The collections are still at 26,000. So if you add both of those numbers together, including the 600 of the credit card debt that is owed, we now have a total debt of $47,600. You will multiply that number by 12 months. You would get now monthly payments of $3,966.67. The total income for this group of individuals with credit scores of 653 to 743 is $88,000. When you do the math on the new credit and when the debt of the student loan decreases by $20,000, the debt to income ratio went from 76% down to 56%. So we take the 47,600 divided by 88,000, which will give you 56%. This person decreases their debt to income ratio by 20%. Now, to go back and answer the questions, did the collections improve? No. Did the credit utilization improve? Yes, and I'm gonna tell you why. The reason this group credit utilization improved because credit utilization is just not credit cards. It's lines of credit that's extended to you from an organization that put the risk back to you. So it's not a secure line of credit, it's an unsecured line of credit. So the resilient score, which decreased in this matter, let me know that the credit utilization improved because the debt to income ratio decreased by 20%. So yes, the debt to income ratio did decrease, which improved the utilization. The overall credit and mixed credit, did it improve? Absolutely. It decreased good debt, which decreased utilization, and you still have a low utilization of 8%. 26,000 in collections. Now you only have 21,000 in student loan debt, but this category makes $88,000. So if you are in this range between 653 to 743, and this is the makeup of your credit report with a similar to close income range, when $20,000 is removed from your credit report, you will see a growth in your credit score. Again, my name is Lynette. I am the founder of DALS Credit Solutions. Our topic today is student loan forgiveness. Will it help the score or will it hurt the score? The goal is for you to understand the numbers and will this overall benefit you? Now, I will never tell you to not take $20,000 from the federal government to decrease your debt. However, the goal is for you to know that if you're going to seek assistance with credit restoration and they include student loan forgiveness, I don't want you guys to think you're going to get a credit score with this range. Well, in other ranges, mentioned that you will get an 800 credit score if your credit is severely compromised. The goal is, again, to bring awareness. We are using the platform Zoom, and this is Credit Tip Tuesday. As we continue, now, you must know as we keep going that you will see the more you have a higher score and a higher income. If your income is higher than the debt that's owed, you will see a benefit as I demonstrated. 744 to 800 plus 0 to 2 adverse reported. However, you have larger lines of credit and your student loan debt is 30,000. We looked at a 3% utilization with lines averaging of $50,000. Average credit age is 20 years. In this area, normally you will only get the 10K because you're going towards that range. Many people in this area within this classification may or may not receive the Pell Grant. If they did, if they fit in the income criteria, they will get 20% off. If they did not, they would get 10% off. The student loan debt with 2 late payments, 30%, $30,000. The income range is between 90 and 110,000. I used 110,000. Again, as we calculate this, I will say it briefly. Line of credit is 50K, student loan debt is 30K. So we added both of those together and we have a total of 31,500 that's owed on this debt, okay? So the reason I did not include the 50K because the 50K is not what's owed, only 3% utilization of the 50K, which would be 1,500. In order to calculate a utilization, you take the amount of the credit limit and multiply it by the utilization. We are net 3%. So you will multiply 50,000 times 0.03. You will get the amount owed is 1,500. You don't owe 81,500 or 80,000. He owes 31,500. Student loan debt's 30,000, 1,500. Now, I didn't include no mortgages or anything like that because it's stated you only can't use living expenses or things of that nature. Many can argue and say, well, you didn't include a mortgage. You're right, I didn't. But if you want to do it with a mortgage, we can do so. However, for this example, I did not. If there are 30,000 in student loan debt, 10,000 was forgiven. Okay. So now we have a 31,500, divide that by 110,000. Debt to income ratio is 29%. If they take 10,000 off the 30,000, we have 20,000 now, and we still owe 1,500. You would get a debt to income ratio of 20%. So we take the 21,500 and divide it over 12 months with an income of 110,000. This person's debt to income ratio has dropped 20%. When you decrease your debt to income ratio and you don't have negative reporting on your credit profile, you will see a benefit with the student loan forgiveness. Again, I'm not one to tell you to not get student loan forgiveness, because any money, not any money, however, if the government is giving it, please make sure you take it. Also understand the taxes. I am not a tax professional. Don't ask me nothing about the IRS. I don't like them like you don't like them. However, I stick to the waters and the lakes that I am used to. Please seek tax professional help. It's very important. I'm not a tax professional. However, I am a numerical genius, and I do quote myself that very well. And when it comes to financial literacy, we don't use software because we are aware we use numerical factors to ensure that credit growth is organic. We don't add authorized users of an unknown source. We build credit profiles so you can gain your own credit lines. We've worked with over 500 or more people, and we are well respected in any government space, along with local and state. We also deal with nonprofits, and the goal is to educate individuals to not only get that line of credit or get that home, but to remain, because our goal is to decrease the charge-off rates, decrease the charge-off of credit utilization, credit cards, ensure that you can pay back the debt. Everybody is suffering at these times. However, there are practices that you can use to, make sure you don't get in those categories. And if you're unable to pay a debt, please call. It's very important. Now, to give you a conclusion of what we discussed in all four categories. If the payment history remains compromised with collections, credit utilization is insufficient for the amount forgiven, and the credit remains, the algorithms will understand there is not enough to improve the profile, even with a 20K reduction in student loan debt. So if we look at, and we'll review scores between 450 and 566, the credit utilization, debt to income ratio went to 60%, 567 to 652, debt to income ratio went to 88%. When we begin to increase the scores, debt to income ratio decreased by 20% for 653s to 743s. And when you get to your 744s to 800 plus, debt to income ratio decreased by 9%. Again, this is what our organization normally sees when it comes to these ranges. However, this is not to tell you to not participate with the student loan forgiveness. This is to make you aware when someone says to you, if you come to my organization and we get your student loan forgiveness, I can assure you that our credit repair will boost your score by 200-300 points. It will not. I can promise you that. Unless they're adding a whole bunch of authorized users and doing all types of other stuff. Again, I have nothing against no one. The goal is to bring awareness to individuals that's really concerned about student loan forgiveness. With the decrease in debt and the positive payment histories, the score would decrease with the next reporting cycle. Again, if the 20K were an option to repay compromised areas, the category of individuals will see an increase in improved credit worthiness. excuse me, encourage the clients during consultations to review the credit profile and to give an accurate insight on how the student loan forgiveness will benefit or compromise. So I ask credit companies, small or large, are we doing credit packages and delivering promises while using authorized users and credit sweeps? When will the numbers matter? If 20K reduces the debt and promises are made for the client to see an 800 credit score, we will continue to add band-aids on wounds that need surgery. The goal is to bring awareness, not to sell. If you sow into your business, you don't have to sell it. Again, this is nothing against any other organization out here doing credit restoration. However, the goal is to bring awareness to that potential client or current clients that if I do a consultation, am I giving accurate information regarding student loan forgiveness? And if I am, can you look at my profile to make sure that I will benefit? We are not, DLS Credit Solutions is not telling you not to participate in the Biden administration student loan forgiveness. However, do not fall for that nonsense when they say we can ensure that your credit will reach 800s only if you're in certain ranges. You may see that. However, when it comes to student loan forgiveness, only certain ranges will benefit more than others. Please forgive the typo. Scores ranging from 745 to 800 plus. Also overall 744 to 800, and then scores ranging from 653 to 800 will see the benefit of the forgiveness. Again, make sure you look at your credit profile and understand how this will benefit or hurt. Again, we're not telling you not to take it. We're telling you to please be mindful of the profile and don't be fooled by the nonsense. So as we continue, if this is your first time tuning in, my name is Lynette. I am the founder of DALS Credit Solutions. We are speaking on student loan forgiveness, and this is Credit Tip Tuesday. We are using the platform Zoom. And if you have a question, place it in the comments. If this is your first time viewing, thank you. And put in the comments where you are tuning in from. If you are watching a replay, please put in the comments hashtag Credit Tip Tuesday replay. If you have a question, it is best to ask it here. If you decide you want to come in my inbox or ask questions outside of Credit Tip Tuesday, you will be charged a fee. However, I don't recommend that if you cannot afford it. The goal is for you to have the awareness and learn it here. If you must watch this again to gain knowledge, please do so. Our videos are on the DALS Credit Solutions Facebook page, LinkedIn, StreamYard, not StreamYard, LinkedIn. It is on StreamYard, but we stream with StreamYard. So it's LinkedIn. I'm having a brain fart. LinkedIn, we call that Instagram, Facebook, Twitter, and all the platforms. If you want to come on my email list, please do so, sign up, and I will put my website in the comments. If you have a question, this is the time to ask it. Now, when you hear about student loan forgiveness, know that it is a whole umbrella. There are many ways to get your student loan forgiven. There is no such thing as somebody can make your student loans disappear on your credit report. I don't care if they show you Credit Karma. I don't care if they copy and paste or steal somebody else's data, whatever the case may be. Yes, I am talking heavy because I can. One, two, when the federal government owns the debt and the IRS who owns the debt, you can't mask or do any of this. They own the debt. That means we owe them. Student loan forgiveness have many categories. Biden and Harris just came up with a new way of doing it, and kudos to any and everyone who do receive it. Just be mindful that Even with the forgiveness, yes, you decrease some debt. However, it may hurt or help your credit profile overall. So again, if you want to copy these slides, you have the teacher loan forgiveness, the temporary expanded public service forgiveness, federal student aid forgiveness. I will place all these comments in the link, these links in the comment section so you can read on qualifications and how to apply. Again, this is an area of growth and understanding. So when you hear student loan forgiveness, it's not just what Biden and Harris put out. There are many student loan forgiveness programs. They even have some that's first come, first served. With the new ones, there are income categories. If you work for a public sector dealing with the federal government, nonprofits, or partner with nonprofits, you can be forgiven. Again, I will put these links within the comment section. If you learn the numbers, the growth of awareness will give the true meaning of the gift. When I say this, we all want to build our mindset on the importance of credit worthiness, what it means. How do you go about it? How do you dispute? How do you understand that if you're doing this correctly? So the goal is to learn the numbers. The growth of the awareness will give the true meaning of the gift. Once you learn this, it doesn't mean you're not going to make mistakes. You'll be more aware of what not to do. And even if you make mistakes during the growth, you still are understanding the numbers. You don't want to have someone to mask the things that are keeping you from that exceptional credit score. If you go to people that use software, again, it's nothing against anyone, but I can say what I feel. And I'm not saying this rudely. I'm saying this because we have changed many lives, paid and non-paid. If you understand the numbers and the importance of the growth and the algorithms, you will know when someone approaches you and say, I can do this, that, and the other. Ask them, how? Can you show me numerically? Ask them, and I challenge you. Ask them, how can you show me if I get this amount of debt, how would this help or hurt my credit? Allow them to show you numerically, because the goal is for you to become educated so you don't come back unless you have a new product or service that you want to offer. It's very important. So I will continue. In summary, when it comes to student loan forgiveness, one must understand a series of information. One, how will it affect the overall performance of the credit profile? Two, will one see credit growth with student loan forgiveness? Three, how would debt to income key ratios, and the word key is very vital because it's the ones that's measuring your performance, measure overall. Four, what area of the student loan forgiveness do you qualify for? Five, do you understand the dynamics of the student loan forgiveness program? Thank you for all that tunes in. And I will ensure to put the links in the comments so you can have them. I will stop sharing my screen. And if you have any questions, please let me know. I will be 1 second. And thank you for everyone that tuned in. I'm like pretty excited about this. And the goal again is not to bring anyone down because no one is perfect. Because I know damn sure I'm not. We all go through things in life. The goal is for one to understand, at the end of the day, we can't keep selling false dreams and hopes to individuals that want to render our services. And I say us because, again, we're all in this industry. However, for the person that is getting service, the goal is for you to please, and I mean please, stay consistent. It's your job to follow up. It's your job to understand that this is your credit. The goal is for you to gain knowledge. But if you're not consistent, you won't get nothing but, uh, excuse me, nothing but a headache. So make sure you are tuned in and be aware of student loan forgiveness, your credit overall, and grow your credit worthiness. Let's see. And I'm going to put, why do I have this capitalized? Thank you for everybody that's tuning in or tuned in. Place your comments and questions within. Well, that's crazy because that came up as a link. I'm going to try to get the other student aid information, the link as well, because it didn't come up. So anyone that have any questions, place them in the chat. We can have a discussion. I can never say that word. We can have a conversation. Um, sorry about that. If you have any questions, please place them in the chat and we can have a conversation. If this is your first time tuning in, make sure you like, click, and share. If you are watching a replay, put in the comment section, hashtag Credit Tip Tuesday replay. We are using the platform Zoom. Studentaid.gov. And if you have any questions, again, place them in the comments. So as I am looking for this link, we will be concluding Credit Tip Tuesday. Thank you for always tuning in. Thank you for being loyal. I'm trying to, get myself acclimated back to the platform. I did put the links in the comment section. We are live using the platform Zoom. And I thank you. If you want a copy of the slides, place them, your email in the comment section so I can send them to you. And be sure to rewatch Credit Tip Tuesday because this is a lot of information that I did give. I look forward to working with you all, speaking with you all, and remember to be safe, be secure, and be aware of your credit. DALS Credit Solutions, we do not judge on the why, we improve the how. All information given is for educational and awareness purposes only. We do not participate in credit profile numbers, illegal removals, and anything that is legally yours, we will not dispute. Again, thank you for your time. I love you so much. I appreciate you all. And make sure you like, click, and share. And I will speak with you very soon. Take care.